This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. Silver is not just ramping because of geopolitical tremors, Trump taking Maduro, or Iran escalation, or China heating up. All of that is not the only reason silver's running. Gold too. Metals in general are the new oil. I've been talking about this for a while, where I did not see the burst in spiking higher oil. I saw the burst in spiking higher metals, both base, tin, copper. You've got industrial, which is also silver, steel. These are examples. And of course, precious gold, silver. But copper is at my $6 a pound spot price. Luke keeps saying, what about copper? What about copper? So yesterday I did a presentation for Canadian Association of Technical Analysts, and I had to kind of like zoom in on natural resources and my copper and silver and gold calls from way back when and where we're at now. So just a quick little reminder that they're in parabolas. We know this, silver, XME, it's just kind of starting. Anyway, we got a lot of action, and folks are very focused on the short term. I'm really focused on the longer term. And this is one of my main reasons why, when I posted this back in April 5th of 2024, so we're talking all of 2024, all of 2025, and I believe 2026, this train, this is the new train, and it wasn't going to be oil. You know, I was bearish oil the past 2 years and bullish metals. So this is basically not done. And the parabola is not just industrial use, but it's also industrial use, meaning that this transition out of dollar for BRICS nations is a slow train. So the dollar has been now replaced as the number one global reserve currency. So we've seen gold move up the ladder. It replaced euro, which was in number 2. Now it's replaced dollars, which was in number 1. But it's hoarded. We know this because of all the reasons on a macro level that gold has a tailwind. Silver, more industrial. Copper, much more industrial. The electrification that's been slowly building, and I'm very bullish that that's going to continue. Not just the AI demand, but electrification, EV, reduction in global oil demand. So anyway, with that, this is really important because I think we're getting to that point where all the macro triggers of why precious metals would move higher, gold, silver, and miners, and I wrote about that, and every single one of the macro reasons are 100% on cue. And remember, we also had a 1970s style chase when gold was $35 and it ran all the way to $850. So just to be at $4,500 right now isn't representative of this race here. We got miles we can go. But the point is that as we move into this Trump New Deal, where now industrial renaissance is the word I'm looking for, this is going to demand so much more copper. And copper as part of XME, which was recommended, if you remember, back in May. And then this is a 400-week moving average, which I am completely obsessed with as it relates to trend reversals. And the same exact 400-week was for FCX, which is obviously a big part of copper. Well, copper's now moved up to $6 a pound, which was a 2023 target. In other words, I said it needs to get to $6 before they're even going to invest. So now that they've got that level, we can start to see some capex and all that kind of investment, hopefully, because it supports the Trump demands of an industrial renaissance. But that doesn't mean that copper is going to stop going here. We can definitely digest now at 6, I firmly believe, but I actually think that this can double. And then, of course, I've already given you this gold SPX ratio that once we get above 0.65, we're going to move to 0.75, 0.85, and about here at 0.85, we've got gold at 6,000. And given how many years it has been attempting to break above, I think we're going to hit it this year. So remember, I've already given you 6,000 for gold. And remember my big, crazy chart of silver gold, this geometric mean. All right, so this silver extravaganza, we're at 92 in futures, dollar yuan inversely related. Just follow those two. But this puppy, this that I can't even really show you very well. Anyway, the point is, this is a geometric metric mean, and it's measuring. It's a silver gold ratio, but then with a special little mathematical trick, which makes it a mean. And you know my mean reversion obsession. I am an obsessed mean reversion trader. I don't care about the intraday stuff as long as it stays above the 10-week EMA. So anyway, this is showing me that silver is moving about 4 times faster than gold, and it's not slowing down. It did slow down enough. Remember, I warned September to October and then again into the end of the year, but it's not done. So these parabolas are incredibly hard to chase if you're just going in, or to, I'm just kind of warning you that if I see copper still with a double and silver 150 and gold 6,000, it's really hard to chase that stuff because there's going to be volatility in between. So what I wanted to do was show you where I think we're going to have some volatility in silver and to be on guard. So this is silver, dollar. This is literally that June time frame where I said we're about ready to have after the consolidation, we're going to start to break out higher in gold and precious metals. And oh my God, did I expect that this would happen? No. But the point is, we're here. Now, we had slowed at this fib level. We didn't really slow, but for a few weeks in December. And then this is really what you've got. On a weekly basis, we're heading into about 97, 98 area. I would say at 95, start to take care. I don't know what narrative will enter the scene. It could be China, it could be margins, it could be this. I have no idea. Pricing out rate cuts. Maybe they start to rate hikes. Who knows? But some narrative is going to enter the chat, and I would believe that this is going to be another area of digestion. So for trend longs, you don't care, but for those who are on swing time frame, I'm just saying we do have some pullbacks. That was a shallow pullback. That was a slingshot. This was a shake and bake, margin increases, but you don't see this falling on rebalancing, do you? Remember, I wrote about this. We have mechanical balancing coming in, but it's not gonna matter. Big picture, this is still a huge tailwind for fundamental and macro reasons. Okay, and FOMO, because we got retail chasing it, we got central banks hoarding it, we got industrial buyers, price insensitive, we got quants. Oh my God, those damn CTAs, right? They come in and they just add fuel to the fire. Anyway, here's where gold, I think, is going to also have a little bit of digestion, maybe more than a little, but I won't know until we get there. And that is that 4780 area or 4800. So hopefully that gives you a little bit of, for those who are still looking at silver and gold for potential re-entry or what have you, or to collar your trade if you're a little worried about digestion. I do see that 4780 and basically that 95 to 98 area for XAG-USD, and XAU-USD is 4780. It might mean nothing, or it might be we get a yen intervention. Yeah, I'm looking for reasons. That's how I work.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.